Hello, good to see you. I think it was last year I was meeting with you in Abu Dhabi, and then I think a few weeks later, you announced this massive investment in OpenAI, and all my friends in Silicon Valley, tech reporters were writing like, what is this MGX? Like, where did they come from? So I want to just start out with, can you give us like the genesis story? How did it start?
So Reed, it's a pleasure to be here, and I thank Semafor for hosting us tonight. We really started on the journey of creating MGX about 18 months ago, where we came to the conclusion as a broader ecosystem in Abu Dhabi that in order to invest in artificial intelligence, we really needed to approach it thematically. It wasn't really done in a way that we saw other funds really organize themselves around the broader thematic. We needed to be able to invest in semiconductors. We needed to be able to invest in data centers and artificial intelligence infrastructure. We needed to be able to invest in the technology itself. And there are obviously different asset classes, different stages, different scale that's required in order to do all of that and bring that entire ecosystem to bear. That's really at the core of what MGX ultimately is. It's an AI native investment vehicle, a GP, that's focused at investing in AI as a broader thematic.
And do you have an actual thesis within that? Like, do you have a focus or a sort of long-term idea of where this is all headed?
So ultimately, our view is that the transformation and value creation that artificial intelligence is going to create for humanity as a whole is unfathomable, even in the way that we understand it today. And again, put yourself 18 months ago, and obviously we know a lot more today than we did 18 months ago. And we still are of the view that the scale is something that we do not understand. Let's pick infrastructure, for instance. And that's a space that's core to what we've done over the past 18 months of capital deployment. The infrastructure needs in order to fuel this transformation, this global and economic transformation, is in the trillions of dollars. Whether you are bearish or bullish on what this ultimately means for humanity and society more broadly. Let me put numbers to that, just so we have a better sense of what that means. Today, we have about 66 gigawatts of installed data center capacity globally. It took us about 20 years to get there. Pick your favorite consultancy firm. You're generally going to land anywhere between 200 to 300 gigawatts of capacity that's required in order to fuel what we believe today the need is over the course of the next, call it 5 years. Every gigawatt that we install, just core and shell, is $10 billion of capital. When you install kit, that's another $35 billion of capital. So whether you land at 100 gigawatts or 300 gigawatts, we're talking trillions of dollars. The amount of equity, the amount of capital that's required in order to enable the technology and its potential is substantial. And so we talk about these very large numbers in terms of data center requirements and equity requirements. And on an absolute basis, these are big numbers. But on a relative basis versus the need that we know exists over the course of the build-out in the next 5 years, 10 years, 15 years, it's a drop in the bucket.
And this is how you think of how you sort of size data centers as in energy consumption in gigawatts? Is that?
So that's generally how you essentially measure the size and scale of compute that you ultimately need to build out. Now, compute needs and requirements are set by obviously the use cases and the applications, and we're starting to see meaningful adoption not only on the consumer side but the enterprise side. Mark made allusion to this obviously on the white paper that was recently published by MGX and Mubadala shortly before Davos this year. And our view is that we're going to experience an acceleration. I think again what we're seeing on the technology evolution and on the value that AI can create not only on the efficiency side, but more importantly on the growth side, on bringing return on investment forward, on creating economic opportunity for companies and for people, is still not fully understood today.
So yesterday, the Trump administration announced that this investment in OpenAI had gone from, I think, $100 billion to now $500 billion, which is just an absolutely staggering number. I mean, it's like twice, if you take adjusted for inflation, like twice the size of the whole Apollo program, space program. Do you worry at all that there will be, as sort of Matthew pointed out earlier, that this stuff will get more efficient, and maybe it won't take as much energy to run in the future, and you'll have sort of overbuilt it all?
So again, I think the use cases that we're already starting to see and the build-out requirements are so substantial that whether you're a bear or a bull, the dollar figures are substantial. That's how we essentially started, right? So even if you take the most bearish view, you still require maybe $1 trillion of capital in order to fuel data center build out. Things will get more efficient. Chips will become more efficient and more powerful. But the technology ultimately will also become more powerful. So we see the opportunity well beyond what was announced yesterday and what was announced by a number of different partners over the course of the last few months. Our view is that there isn't sufficient capital in order to fuel what we believe is humanity's biggest infrastructure build-out in history.
How do you come to that conclusion? Do you have to study, the model architecture and think about where the actual compute is being used? I mean, we're seeing this new sort of revolution in test time compute, which is going to massively increase, inference costs. How much do you have to geek out on that stuff? And is that how you do it?
So that's one way to do it. I mean, before we even get to AI, let's talk about cloud, right? The U.S. is probably one of the most penetrated markets from a cloud penetration perspective, and we're at 40%. So even with cloud, you're still at earlier days. And if you look at geographies such as Asia, you're maybe closer to 15 to 20%. So even cloud isn't even there on its journey. So you can layer on what the artificial intelligence, both inference and training compute requirements ultimately would be, and we're still at very early days of AI penetration. So again, cloud, a technology that we've had for substantially longer, is still not as well penetrated as folks may believe.
You mentioned, silicon is one of your areas. It looks like the hyperscalers right now, Google with their TPUs and Amazon with their Trainium and Inferentia chips, have really, they have a real advantage in both like efficiency and costs. How do you compete with that? Is that a real threat to say an OpenAI with Oracle using NVIDIA GPUs?
I think you'll continue to see evolution in chip technology. One of the critical ways that these chips are developed essentially require both a technology partner and a manufacturing partner. Now we've seen, given both Meta's use cases and Google's use cases in your examples, a meaningful amount of evolution in energy efficient, very productive chips that cater to their technologies. Our expectation is that continues to evolve, and the technology roadmap of the likes of NVIDIA continues to evolve in a way that provides even more scale, even more efficiency, and more power for use cases that we do not fully understand today. And so you'll continue to see this evolution just as we have over the past 2 decades around chip technology as well. Now, critical to that is obviously the hyperscaler, the ultimate consumer, but we're starting to see obviously OpenAI become a consumer of these chips, and so reasonable to expect them to start thinking about what their chip strategy and their silicon strategy would be as well. And so we're going to continue to see evolution around chip technology more broadly. The bottleneck that's been created around some of the chipsets that exist that NVIDIA has been producing will continue to exist. They'll continue to push the technology forward, and folks are looking for alternatives that suit their use cases.
If you're playing in this game where you're going to make these huge bets on foundation model companies, there's really only a small handful of players in that space, and it's this horse race, right? So is your philosophy like let's pick the one we think is going to be the winner, or do you actually want to spread those bets out? How do you think about that?
So what we've done on the AI tech stack, as we think about where's the aggregation in this technological revolution, in the aggregation of spend when it comes to Gen AI spend, we expect there to be $500–600 billion of spend, again, taking a 10-year view here. And generally, in every technological revolution, the infrastructure layer has accrued a significant amount of spend here. And so our view is that the frontier models have a right to win. I think it's very early to decide or determine which one could be the single winner, or if there would be a single winner outright. And so our view was backing platforms or backing frontier models that had a right to exist, whether it's a proprietary data set or differentiated distribution model, or scale, or access to talent, or access to capital. These are all things that ultimately are what enables these platforms to win. And so we've taken a basket strategy when it comes to investing behind these platforms. And our view is that it's not going to be a winner-take-all market. Each has their own right to exist and right to win, and it's too early to make that call. Our view is that the Gen AI spend target is real, and we believe that the infrastructure layer is where the spend will accrue.
I mean, are there? You mentioned a couple of factors, but I mean, if one is going to win, why do they win? Is it they have access to more? They're able to build out more computer. They have access to more power, energy. Like, what do you think? Or is it the algorithm?
I think it's a combination of things. I think distribution is extremely important, and so ensuring that you have the right distribution partner or model or framework. Some of the ones that we've obviously discussed are ones that have that certainty around distribution. Access to talent has become, obviously quite critical. Not only access to it, but retaining it, ensuring that it continues to be motivated. A lot of the talent that we see do very well in this space are research-oriented rather than business-oriented. And so finding the right balance in corporate structure in order to be very mission-driven, yet making it profitable for the investors to continue to fund, because the capital requirements for these businesses are substantial. And so it's a combination of these factors. Access to capital is quite important. We know that compute is a critical component of the equation. And so that puzzle, that essentially, all of these different elements ultimately need to exist for a frontier model to ultimately succeed. Now, the challenge is that it's a race. It continues to be a race. Obviously, you see folks catch up quite quickly once the next iteration or generation of models are released. But the interesting piece is that the application layer on top has not fully yet been established, right? We're starting to see some of that get developed. We're starting to see applications sit on top of multiple frontier models or multiple models. And so again, we're early days in on what this is ultimately going to look like over the course of the next 5 to 10 years. But I think it's important to back ones that have all the elements that would essentially be requirements for them to be successful.
So power, you mentioned earlier, energy. I know you're not investing directly in energy projects, but you obviously have to sort of figure out, is there going to be enough? And is it going to happen fast enough? I think time to power is another big question, right? Can we build nuclear power plants, for instance, in less than 10 years? Is that a worry? Is that a risk factor, do you think, in all of this?
I think it is a risk factor, but it's something that we bring forward in our discussions and our thinking quite early. We're not energy investors, although energy is obviously a clear input into what we do invest in. As part of our global AI infrastructure partnership with BlackRock, GIP, and Microsoft that we've announced a few months ago, although, again, the intention is not to invest in energy, working with energy partners to enable the build-out of the compute is a critical part of the strategy. And so I think this whole revolution ultimately is one of partnership. You have to work with the different constituents, whether it's the regulators, whether it's the energy providers, or the capital providers, or the technologists, or the hyperscalers, in order to make this successful more broadly. Now, this obviously, is a comment that could apply to what we're doing on infrastructure, but applies to the technology stack as well. And I think this is really why MGX is well suited for this. We were built partnership first. That really is our DNA and how we go to market. Everything that we've done has really been with that spirit or that lens of partnership. Everything that we've announced since our existence has really been with that lens. And so that's something that is core to what we believe is an imperative in order to make this technological revolution a success, and not success, but valuable for humanity more broadly.
All right, well, last question as we wind down. So you're here at Davos. Everyone's talking about AI. You said earlier, I mean, the changes are going to be absolutely profound. I mean, I agree with you. Do you think that people here are really kind of grasping like how big this is and the societal change and impact that this is all going to have?
I think it's still, the evolution of the technology happens almost hourly. It's really hard. Many folks have said this now. It's hard for humans to really understand the exponential. And given what we're seeing, even what we believe is going to be released in the next month or 2 months, folks don't fully understand or fully embrace the amount of value that this technology will unlock. Now, this is going to change the way we work. It's going to change the way we live. But it's going to create a lot more growth than displacement. And so this is where partnership is important, because in that journey may take 1 year, 2 years, 5 years, 10 years. That journey almost, is predicated on society's ability to bring everybody along. And so that's really critical to the understanding of the evolution of the technology.
Well, I hope we have that conversation more. Thank you so much, Ali. It was great. Great. Appreciate it.